You're watching Silver News Daily. Subscribe for more.
It's pretty plain to see that there was gold out of Fort Knox, West Point, etc. that had been leased out. I don't know. I don't think an audit is going to be done, and if it is done, we're not going to get the real story anyway. It would be very interesting to see a stadium in China just filled with gold. You know, here's our gold. What do you have? If that were to happen, you would see a complete implosion in the value of the dollar. The dollar would be sold everywhere. And when I say the dollar, I'm including treasuries. Treasuries are the foundation to the financial system, and treasuries are quicksand. They're dollar-based, and they're issued by a bankrupt or insolvent.
They say wars are fought with bullets, but what if the next global battle is waged with gold? Imagine this. China unveils an Olympic-sized stadium stacked floor to ceiling with shimmering gold bars. Not just a flex, but a message. A warning. A declaration that the age of dollar dominance is over. While the Western world debates inflation targets and fiddles with interest rates, BRICS has been quietly preparing for a financial revolution. And now, the mask is coming off. Rumors are swirling that Fort Knox is empty, that America's gold has been leased out to prop up illusions. If China makes its move and exposes the lie, it won't just shake markets, it could shatter them. Treasury bonds will become radioactive, the Fed will lose control, and interest rates could explode past 50%. In the middle of that storm, one asset won't just survive, it'll thrive. Silver. Not $35 silver. Not $50 silver. I'm talking $500 and beyond. If you think that sounds impossible, stay with me. Because what I'm about to show you is more than speculation. It's the fuse to the financial nuke the world never saw coming.
As far as North America globally is considered the best jurisdiction, and in my opinion, I don't think there's going to be a confiscation like there was in the 1930s. I think it's much more likely that mining companies in the U.S. and in Canada get nationalized. So I would put North America on the watch list as far as not being the best jurisdiction. I mean, the problem with answering this question is administrations, politics can change on a dime. So I really don't want to go on the record saying what I think is what are the better jurisdictions, because that can change with an election. And it can also change with, once the financial system collapses, pretty much all bets are off. And to me, there's obviously two big risks in the mining industry. One is the operation risk. If you got an underground mine, does it collapse? Does it cave in? And then you've got the jurisdictional risk. Do you have, does the administration in whatever country you're talking about, does that change its mind? Does it move toward, nationalizing mines? I mean, it's a tough question. I really don't want to go on the record, like I said, because, tomorrow morning you could have a coup or an election or whatever, and things change. But I do believe that North America is not the pure safe haven that it once was for mining companies, just simply because, that can change. I think it will change. And if you look at the direction of, look at the direction, look where we were over the last 4 years in the United States. Look where Canada is right now. They could shut an operation down in a heartbeat. Gold and silver can never be made worthless. And the reason being, gold is accepted anywhere and everywhere around the world. The West has tried since August 15th, 1971, to demonetize gold. And the peak of their success would have been the year 2000, when gold hit $252 an ounce. Here we are now at $3,200. You were looking at $35 an ounce in 1971. and we just recently hit 3,500. So that is 100-fold increase. And another way to say that is the dollar lost 99% of its value since 1971. So to answer your question, I don't think there's any way that gold and silver could become worthless. And the dollar itself is the reason behind the BRICS formation in the first place. And then, of course, what really cemented psychologically to the BRICS and proved to them that they were correct to try to exit and move away from the dollar is when Russia had the 300 billion in reserves sequestered, absconded with, whatever you want to call it. What was it? It was October of 2023. I mean, if the United States can steal 300 billion from Russia, they can steal whatever they want from anyone they want.
Picture the moment. Global news outlets flashing images of China's gold-filled stadiums, a glimmering sea of bullion on full display for the entire world. It's not a stunt. It's a declaration of monetary independence. And behind the scenes, it sends a chilling signal to every central bank, hedge fund, and government holding U.S. treasuries. The dollar is backed by trust, not truth. And that trust just evaporated. This isn't hypothetical anymore. China's gold hoard is no secret. With over 2,200 metric tons officially reported and far more likely hidden, China has spent years acquiring physical gold, all while the West played its games with leased reserves and paper promises. Now imagine if Beijing confirms what insiders already suspect, that the gold America claims to hold in Fort Knox has long since been lent out, shipped abroad, or otherwise encumbered. In that moment, the illusion of dollar dominance collapses. It's the ultimate power move, one that doesn't require firing a shot. With a single image, China could prove that the emperor has no gold, leaving the dollar naked and vulnerable. Confidence evaporates. Trust in U.S. assets dies. And every financial institution that's been hedging their bets quietly in the background suddenly panics, looking for safety, looking for something real. And silver? It's waiting. Underpriced, undervalued, and on the verge of a historic awakening.
And as a matter of fact, I think his number was something like $3,500. So we're in that neighborhood right now. You're watching the man-made reset. I mean, just again, look at the BRICS versus the West. So there's your divide. There will be a reset from that. But as Jim talked about, being a man-made reset, it's not going to work because whatever the reset of the dollar is, it's still going to be a fiat. I mean, even if they push us into CBDCs, what is the backing to that currency? There is no backing. Whereas, the BRICS is going to back their currency somewhere 20 to 40% ratio. We don't know what that number is going to be. But even at 20%, you'd have to have big numbers. I mean, you probably have to have 15, 20,000 gold just with a 20% backing. The second reset, and there could be a third reset, is going to be more Mother Nature. It'll look more like Mother Nature, like a real reset, something that is done by free and unfettered markets, as opposed to a new currency being jammed down our throats, which is the plan in the man-made reset. I don't think either. I think the fix will be a complete collapse of the financial system. The reason being, I mean, look what happened this past Friday. Moody's downgraded U.S. debt. I mean, the U.S. debt should not even be close to AAA rated. I mean, all you have to do is look at the numbers. You look at the amount of interest alone that has to be spent. We're looking now at roughly 5% of GDP is the interest alone, and we're having to borrow that to make the payments. So the numbers just don't work as far as from a financial standpoint. The treasuries are the foundation to the financial system, and treasuries are quicksand. Treasuries they're dollar based, and they're issued by a bankrupt or insolvent entity. So the math or the problem is that the financial system has been held up by debt and piling more and more and more debt on the system, and that's what's inflated assets, is the amount of new debt coming into the system.
For decades, Fort Knox has symbolized America's gold-backed credibility, a fortress of wealth, a monument to monetary strength. But what if the whole thing has been a carefully guarded illusion? Insiders have long whispered that the U.S. Treasury has been leasing out its gold through shadowy deals and undisclosed arrangements, not to bolster stability, but to prop up a paper system teetering on collapse. The practice of gold leasing, once a quiet tool for liquidity, has become a ticking time bomb. If China steps forward with proof that Fort Knox's gold is gone, or worse, used as collateral across multiple balance sheets, the fallout would be nuclear. This isn't just about optics, it's about trust. Once that trust vanishes, foreign governments, central banks, and institutional investors will abandon the dollar en masse. We've already seen the signs. Central banks worldwide have been dumping treasuries and loading up on gold. But the moment this leasing scandal breaks into the mainstream, it will trigger a systemic panic. The U.S. bond market, once considered the bedrock of global finance, will become a minefield. Nobody will want to be the last one holding a promise backed by empty vaults. The rush to exit could break the Treasury market, shatter confidence in the Federal Reserve, and push capital toward one of the last remaining stores of real value. Not just gold, but silver, the overlooked shadow of the monetary world finally breaking free from its chains.
Because there's no way that the world is going to step up and bring, 9 or 10 trillion into an asset that the world is already moving away from. It's going to be the Fed. The Fed is going to buy Treasury debt, and I mean, if I forget when it was, I think 2019, when the Fed and Treasury were merged, and the Fed was always separate from the Treasury, and it was always completely taboo for the Fed to monetize, because we know what happens with monetization. The currency ultimately collapses. It collapses in purchasing power. It ultimately, the fiat goes to its intrinsic value, which is zero. So when they merged the Fed and merged the Treasury together, that's your right pocket and your left pocket, and the right pocket's borrowing and the left pocket is just printing money to buy those bonds. And if you've got the same entity buying their own wares, then what are those wares worth? And the answer is zero. And that is the foundation to the whole system.
The U.S. Treasury market isn't just big, it's colossal, the foundation for global finance. But foundations crack when trust erodes, and if China's gold reveal ignites doubts about America's collateral, the entire structure begins to shake. Investors won't wait for official confirmation. The mere possibility that Fort Knox is empty will trigger a preemptive exodus. Foreign governments already wary of U.S. debt will dump treasuries in waves, and with no one left to buy, yields will spike. But this won't be a slow grind, it'll be a flash fire. A feedback loop where surging yields force the Fed to step in, but their toolbox is empty. They've printed, they've promised, now they're cornered. Imagine interest rates spiraling, not to 5 or 10%, but to unthinkable levels, 20, 30, even 50% as capital flees paper for anything real. That kind of spike doesn't just hurt borrowers, it annihilates everything, from mortgages to corporate debt to government spending. The dollar, under this pressure, won't just dip, it will unravel. And in that chaos, precious metals won't just rise, they'll ignite. Gold will move fast, but silver will move violently. Its price will detach from fundamentals, driven by fear, speculation, and raw desperation. When paper burns, only metal remains. And silver, cheap, scarce, and essential, will become the most hunted asset on Earth.
U.S. and China? Well, first off, I could show you on the back of a napkin, simple, and this would have been 6, 7, 8 years ago, that they had already accumulated 25,000 metric tons. I think the number is now at least 35,000 metric tons. And
You're talking about China.
I'm talking about China. If I said the U.S., I was wrong. The U.S., we say that we have 8,300 tons. It's not been audited since the 1950s. How much do we really have? My guess is we probably have a couple thousand tons left. And even if there is gold in Fort Knox, West Point, etc., a lot of that is already encumbered. It's been leased out. The paper rights or the paper ownership to a lot of the gold, I think, has already been moved, over the years to other entities. I don't know. How do they do an audit? I mean, if they do an audit, and how do they come out with the real numbers? Because I mean, it's clear, and we know that so much gold had been leased. I mean, even going into the year 2000, 2001, back when Canada sold their gold, Britain sold 40% of their gold. You had mining companies all over the world forward leasing, and then of course the price started to rise, and those had to be covered with billions of dollars of losses. I think it's pretty plain to see that there was gold out of Fort Knox, West Point, etc., that had been leased out. So I don't know. I don't think an audit is going to be done, and if it is done, we're not going to get the real story anyway. I think what would be really interesting is for the world. When I say the world, I'm talking, the BRICS nations, led by Russia and China. It would be very interesting to see a stadium in China just filled with gold. Here's our gold. What do you have? And I think that is, if that were to happen, you would see a complete implosion in the value of the dollar. The dollar would be sold everywhere. And when I say the dollar, I'm including treasuries. So the Federal Reserve setting interest rates, they're in the process now, but under that circumstance, they would completely lose control of the yield curve. You'd see interest rates go to 10, 20, maybe 30, 50% to try to defend the dollar. And, now we're talking Banana Republic stuff, overt Banana Republic stuff.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active. While gold grabs the headlines, silver has always been the market's best kept secret and its most explosive wildcard. It's often overlooked, treated like gold's smaller, slower cousin. But history tells a different story. In every major financial panic, silver doesn't just catch up, it slingshots. In 1980, gold peaked at $850, but silver went from $6 to nearly $50 in a matter of months. In 2011, gold made headlines again, but silver's price quadrupled. Why? Because silver has a dual identity. It's both a monetary metal and an industrial workhorse. And when fear grips the system, both sides of that identity erupt at once. Now fast forward to today. Gold is hovering around $3,200 and climbing, while silver is stuck in the low $30s. But that gap is a lie. It's the result of years of price suppression, derivative manipulation, and strategic ignorance. Silver isn't being priced for what it is. It's being priced for what it was. The truth? Silver is rarer than most people realize. It's more heavily used. It's more under-owned. And when the monetary system starts to wobble, retail and institutional investors alike won't just hedge with gold, they'll scramble for silver. Because when the dollar collapses and bonds go toxic, silver becomes not just a safe haven, but a launch pad. And that $500 target, it stops sounding crazy and starts looking conservative.
You're not going to want to. What I think what he's asking is, when do we sell our gold? When do we sell our silver and buy other assets? I don't think you can do that until there is a currency, some type of currency that can be trusted. Once there's a currency that can be trusted, then you'll see another and another. And what that will be basically is the world going back to asset-based currencies, whether it be silver or gold or oil or what have you. As far as real estate is concerned, why would I don't. Why would the questioner? Why would he even consider moving from real estate? I mean, moving from gold to real estate at these levels, because real estate is a prime example of an asset that's been blown up in, I don't want to say value, but in price, way past the true value. True values on real estate are basically what kind of income, what kind of revenue can you derive from that real estate. And I mean, years ago, you could buy a piece of real estate for way, way less, with the cash flow being a much, much greater percentage than what it is now. Now it's all speculation. People buy real estate because, quote, it goes up. And what the reasoning behind that is, there's been so much debt. I mean, all you got to do is drive through a major city and see stuff being built. And you look at all the big, skyscrapers. None of those are owned free and clear. None of these things are being built with cash. They're all being built, bought, and sustained with debt. And in a debt meltdown, you're going to see real estate drop a minimum. You've already seen it in commercial real estate, but you're going to.
Silver's story isn't just about crisis. It's about demand. Real, growing industrial demand that's surging with every passing quarter. Over half of global silver usage today comes from industries, and the fastest growing segment is clean energy. Solar panels, electric vehicles, and advanced electronics all rely on silver's unmatched conductivity. And unlike gold, silver gets used up. It's consumed, not stored. Every gigawatt of solar power requires about 12 metric tons of silver. Multiply that by global renewable targets, and the numbers go ballistic. Bloomberg NEF projects solar demand for silver to spike 169% by 2030. That's not a trend, it's a tidal wave. Now add electric vehicles into the mix. Each EV uses roughly twice the silver of a gas-powered car, and with global mandates pushing EV production into overdrive, silver's consumption is rising at a pace that mining simply cannot match. The Silver Institute is already warning of deepening supply deficits, with 2024 production at 916 million ounces, and demand pushing beyond 1 billion. That shortfall isn't theoretical. It's here, and it's worsening. As supply tightens and industrial buyers compete with investors in a panic-driven rush, silver's price won't just rise steadily, it will spike violently. We're not talking about a supply-demand imbalance. We're talking about a crisis
See a
of
minimum
availability.
drop of 50%,
When
and probably
users,
more
bullion
likely
banks, and retail investors all race to grab
70,
the
80,
same
even
dwindling pile of metal,
90%
the result won't be a rally. It'll be a
in
squeeze.
price,
And the price
to
won't
get
stop until demand
real
breaks,
estate
or
back
the system
to
does.
a foundational asset. When I say foundational asset, meaning whatever cash flow can be derived from that real estate can carry the whole thing and give a dividend, if you will. But if you own a piece of property that the cash flow just covers all your expenses, so it's not even negative cash flow, but there's a lot of deals now out there because of price that are negative cash flow. But we get to the point where cash flow, where you're not cash flow negative. The bet right there is real estate's going to go up. That's the only reason you would want to own the real estate, because if it's cash flow neutral, if you're not getting anything from it, where's your win? Your win only comes if the real estate goes up. But with a debt liquidation, real estate is going to get destroyed. And when all is said and done, once we go through the tumult of a financial collapse, real estate, by and large, is going to be seen as a liability rather than an asset. Because, let's say you have an income-producing piece of property and the economy goes to shit. Now you're trying to carry that, then you got to pay the interest, you got to pay the taxes, and of course taxes have exploded over the last 5 or 10 years. So I'll just leave it by saying that I think real estate is going to be seen as a liability rather than an asset at some point in the not too distant future.
Deep within the heart of the silver market lies a battleground most investors never see: COMEX. It's where paper contracts rule, where billions in silver change hands without a single ounce ever moving. And for years, whispers of manipulation have echoed through this market. Banks accused of naked shorts, algorithms crushing rallies, a game where price discovery is buried under layers of synthetic leverage. But something is changing. The cracks are showing. In 2024, open interest on COMEX surged to record highs. Managed money positions turned aggressively bullish, and the shorts, many held by major institutions, started to cover. Fast. Deliveries spiked. Physical premiums began to rise. Behind the scenes, it's becoming clear. Faith in paper silver is eroding. Traders aren't just betting on price. They're demanding metal. And in a market where the ratio of paper to physical can be over 100 to 1, that's a recipe for chaos. If the wrong player demands delivery, or if trust breaks in the system, COMEX could face the one event it's never prepared for, a physical squeeze. A run on silver, where the price isn't determined by speculation, but by who can actually get their hands on the metal. When that happens, the artificial ceiling that's kept silver subdued for years will explode. Prices won't just spike. They'll gap up violently and without warning. And in that moment, $50, $100, even $500 silver becomes not just possible, but inevitable. Because when confidence in paper evaporates, only the real thing matters. And physical silver? It's vanishing fast.
Perfect example is Washington, D.C. You've got the Doge cuts. You have the gravy train is ending. So the cash flow to individuals is ending. We go into any type of recession, a deep recession would be even worse. But we're going to go into a recession. When that happens, people lose jobs. There's less income outstanding, and that makes it even more difficult for the buyer. When I say for the buyers, buyers, you have to, in order to have a sale, you have to have a buyer, and if you're going to have a buyer, that buyer's got to have cash flow. And if you're cutting cash flow throughout the system, I mean, just look at how many properties, literally thousands of properties popped up for sale in Washington, D.C. in January, February, March, and they're just sitting on the market. Now what's going to happen is, after 3 months, 4 months, 6 months, then you're going to start to see the price cuts on the asking price, and then you're going to see the desperate people will end up selling below the already cut prices, and it's just a domino effect to the downside. And it's the illustration of I don't want to call it a debt collapse, but it's like a Ponzi scheme that if you're not getting new money into the system, the whole system collapses, and that's where we're headed with the whole system. But we're talking about real estate right now. Without the cash flow, with less cash flow, there's less buyers. I mean, it's pretty simple. Talking about first-time home buyers, think about who the first-time home buyers are. I mean, at least half of them, probably more than half of them, are purple-haired people with nose rings that don't believe that they should have to go to work at 8 o'clock in the morning and aren't allowed to come home until 5 o'clock. I mean, the work ethic is gone in the younger people in this country. And it's the younger people that buy first-time homes. And if the first-time homes, if sellers of first-time homes can't sell their property, they can't move up to the next property. So when you start with the smallest houses not selling, it's like a ripple effect upwards to the higher price homes. Why do you not want a paper trail? You don't want a paper trail because you don't want to pay taxes, and that's not legal. Now, if the question was,
what about the flip side where people?
If the question was the other way around,
go ahead.
how do I hide from the government the fact that I bought gold or silver? I don't see the necessity for that because it's legal to do it. You can exchange currency for metal, and I don't see any possible way that the government goes house to house confiscating coin, because the first day there'd be over 100 people blown away at the front door. I mean, I don't see that as a possibility. It's much more likely that they'll do some type of tax scheme, raising taxes on precious metal sales.
As the West clings to financial engineering, the East is rewriting the rulebook. BRICS isn't just a trade alliance anymore. It's a monetary insurgency. Brazil, Russia, India, China, and South Africa have quietly been building the architecture of a parallel financial system, one that doesn't rely on the dollar, doesn't answer to the IMF, and crucially, doesn't settle in paper. At the center of this new system, gold. But silver's moment is coming too. BRICS central banks have been vacuuming up gold at historic levels, over 1,000 metric tons in 2023 alone, with another 290 in just the first quarter of 2025. Why? Because they see the writing on the wall. The dollar is losing its power, not through collapse, but through rejection. And as BRICS nations push for a new reserve currency backed by hard assets, they're sending a message to the world. The age of fiat is ending. This shift isn't subtle. It's structural, it's coordinated, and it's accelerating. And here's where silver comes in. While BRICS accumulates gold to anchor their currencies, silver's industrial value and monetary heritage make it the perfect secondary reserve, a dual-use metal that bridges the gap between technology and trust. As gold gets locked away in vaults, silver will remain the accessible alternative, the hedge for nations, corporations, and individuals who arrive late to the gold party. In a world moving back to hard assets, silver won't just rise, it will redefine itself. From overlooked commodity to sovereign-grade collateral. And when that flip happens, there won't be enough to go around.
That's a difficult question to answer because one of my God-given gifts is that I got a nose for bullshit. I mean, I can just look at something and I can say, well, either that's wrong or this seems correct. It's a God-given gift. As far as digging, I would say once you start digging, be skeptical of everything. And as you're reading something, try to verify it. Verify that what you're reading, go to other sources. Just on any particular topic, go to other sources to verify what you're reading. I mean, the bottom line is you got to dig. You can't just listen to what people are saying or what their opinions are, because I don't know, 7, 8, 9 times out of 10 it's bullshit. And I really don't know how to tell somebody what's the golden website or what are the golden websites that will verify whether something's true or false. And there's not such a thing. You have to question everything. And if something doesn't make sense, dig into it as far as you can, and make sure that you've got take all the information and analyze it yourself. I mean, trust your own gut and don't be gullible. Question everything. John Williams, he analyzes inflation, unemployment, GDP. He analyzes all of the government statistics using 1970s and 1980s formulas, because all those formulas started to change the end of Reagan and then into Bush, and every administration after administration has changed the way they compile unemployment numbers, inflation numbers, et cetera, et cetera. And I mean, if we're saying we have 3% inflation now, and John Williams is 15% or whatever, because he's compiling those numbers the way they did originally, the way they should be compiled. And now the whatever it is, whether it's unemployment, GDP, inflation, et cetera, all of those formulas have been changed to make the numbers look better, and they still look crappy. I'm buying silver, and I recommend that people buy silver over gold, unless you're talking about big money and you've got storage problems and you don't want to store the metal at a non-bank private vault. Just because the ratio is 100-to-1, man's ratio, it takes 100 silver ounces to buy 1 ounce of gold. God's ratio is less than 10-to-1. So, figure it out for yourself. Which one's right, man's ratio or God's ratio? At 100 to 1, we dropped to 50 to 1, and your silver has the silver has doubled in purchasing power versus gold. If it goes down to 25 to 1, you're looking at 4 times. So I think it's definitely in the cards that silver is going to outperform gold from these levels. I hope so.
Why do you hope so?
I hope so because the way the Constitution was set up, the way this country was set up on states' rights. It was not set up with a federal government basically that overlooks or oversees the states. I would much prefer to live in a state, whether it be Texas or another state, that's a sovereign state and joined with other states and the federal government basically just providing the absolute bare necessities. Because the federal government it's not the state of Texas that's taking my civil liberties away. It's the federal government.
The moment China reveals those gold-stacked stadiums, whether literally or symbolically, the world changes overnight. Trust in the U.S. financial system evaporates. The dollar, once considered untouchable, becomes just another fiat experiment exposed for what it truly is, a debt-fueled illusion. Treasuries collapse, interest rates surge, and the Fed's illusion of control is shattered. But while gold absorbs the initial shock, silver becomes the revelation no one was ready for. Because silver isn't just a metal, it's the hinge of the old system and the springboard of the new. Its industrial demand surges, its monetary appeal skyrockets. Its supply? Choked. Every piece we've discussed, China's gold flex, the Fort Knox scandal, the COMEX time bomb, the industrial crunch, the BRICS uprising, they all point to one conclusion: silver's moment is here. And not just at $35 or $50. We're talking $500 and beyond. Not from hype, but from reality catching up to years of suppression and denial. So the question isn't if silver will explode, it's when. And when it does, those still stuck in paper promises will be left behind. If you're watching this, now is the time to prepare. Don't wait for the headlines. Stay informed, stay alert. And if you want to keep riding the front edge of this financial reset, make sure to subscribe. Because the silver story isn't over, it's just getting started. This is not financial advice. Speak to a qualified professional before making any investment decisions.